Hello everybody, welcome back to Investing with Wesley. Today I want to talk to you about why having good credit is so important. Let's get into it. Now first off guys, I am going to talk about how having great credit can help save you money in the long run, but I think everyone knows that at this point. So first I'm going to talk about some of the things a lot of people don't know that your credit score affects. Having good credit is paramount to saving money on the things that every person needs to have. But not only that, having good credit can also affect whether or not you get hired at certain companies. If you're in the military and are trying to switch jobs, having good credit plays a big factor in the decision-making process. If you wanted to join law enforcement at all, having good credit is one of the things they check during your background process. But aside from affecting certain jobs that you might be applying to get, having good credit is also one of the things they check when you're shopping around for good insurance. Whether it's homeowners insurance, car insurance, personal liability insurance, doesn't really matter what kind of insurance you're shopping around for. Every insurance company will also check the person who's applying's credit. And to them, your credit score plays a significant role in deciding what kind of premiums they're going to make you pay. Take car insurance as a perfect example. I did a comparison between two different people. Both of them were identical in every way except for their credit. And honestly, the results surprised me. The person with better credit saved over $1,000 a year compared to the person with less than perfect credit. Let me show you some of the examples and some of the agencies I ran a quote from, giving the exact same parameters. I called 3 different insurance companies pretending I was a broker for 2 different clients. First off, I gave them client John. I said John was 30 years old, had 2 accidents on his record and 1 moving violation, and had a credit score of 510. Next, I told them about Jim and how Jim was exactly the same as John, except Jim had a 740 credit score. After waiting pretty much all day for the 3 insurance companies to get back to me with their quotes, I was surprised to see how much savings there actually was for Jim, considering the only difference was a better credit score. Now, the first insurance company offered John, with his less perfect credit, the standard California coverage of $1,530 for a 6 months period. And in that 6 months, he'd have to pay an upfront deposit of $400 and pay $320 every month. In comparison, the exact same insurance company offered Jim, with his better credit, $180 a month with a $235 upfront deposit. Just having better credit saves Jim approximately $900 over the course of this 6-month term. It also goes without saying that your credit score and how good you are at managing your credit lines plays a significant role when dealing with banks. And I don't just mean when dealing with banks for yourself. Let's say you decided to start a business and it came time for your business to expand, or maybe you just needed to fund some startup costs for that business. Well, since your business is so new, it doesn't have business credit established. So the banks want to know how creditworthy the owner of that company is. And if it's your business and you're the owner and you don't have good credit, chances are they are not going to give you that business loan or business line of credit, because business credit doesn't report to your personal credit. So if they see that you have less than reputable personal credit and you're applying for a business credit which doesn't report to your personal credit reports, you have very slim odds of getting approved. And for some people that are operating a business and trying to make it on their own, that could be detrimental to the success of their business. But at the end of the day, guys, this is a finance channel and an investing channel. So let's talk about how having perfect credit can play a giant role in your finances and in your investments. It goes without saying that if you have better credit, you're going to get a lesser interest rate whenever you try and borrow money. Whether it's for a car, a house, it doesn't really matter. The better your credit score is, the lower your interest rate you owe is going to be. Now, I don't really like talking about buying a house and comparing a 3% interest rate to a 6% interest rate and how much money you're going to save getting a 3 versus a 6. That's common sense. What I do want to talk to you about is why that matters. Why getting as low as possible interest matters more than anything else. And this is because I teach people to invest their money for a greater return than what they borrowed it for. If you have $20,000 lying in a bank and you decide that you don't want to finance buying a car, you just want to pay for it cash, you're not hurting anybody because you're not taking on any debt. But what you could do with that $20,000 instead is take a loan for the car at a 3% interest rate and then invest the $20,000. And as long as you get more than the 3% you owe the bank, you're coming out ahead in the end. This is what the 1% do with their money. They invest their money hoping to get greater returns than what they're accruing in interest by taking on loans. This is why some of the wealthiest people in the world invest in real estate, because it costs almost nothing to borrow money. I think right now a 30-year fixed loan is 2.25%. I want you to think about that number. 2.25% interest over the lifetime of a 30-year loan. If this wasn't your primary mortgage and you bought this house as a rental, then you're only paying the bank 2.25% for an asset that increases in value on average of 3 to 10% a year. And when you factor in inflation and how you're using future dollars to pay down old loans, you're really only paying the bank back 0.25% because average inflation is 2% a year. This is why good credit is so important. When it comes to investing your money and doing what we just talked about, if you had less than perfect credit and ended up with a 6% loan, after also factoring in inflation, you'd have to get 8% interest to just break even and have to get more than 10% interest to come out ahead and make it actually worth your time. Now, I'm not saying it's impossible. It is very doable to get 8% in the stock market, 10%, 12%, even 14%. But think about how greater the win would be if you were leveraging your money at a 2% interest rate versus a 6% interest rate, and you were getting 12% in the stock market, leveraging your money. Now, even the worst case scenario, you having a 6% interest rate, but getting 12% in the stock market, you're still doubling the amount of interest earned by investing your money. But if the interest owed was only 2%, that means that you would be netting a positive return of 10%, which can do absolute wonders for your portfolio value over time. This is why a lot of financial professionals stress to their clients that having good credit is very important, because not only can it save you money on the purchases everyone has to make in their life, like insurance, but it also saves you money in interest. And even for some of you out there that are extremely wealthy and plan on paying everything in cash, the wisest thing to do is to do exactly what the government and the Federal Reserve wants you to do with your money. They want you to leverage it for greater gains. That's how our entire economy works. So remember, guys, that's why having a good credit score matters so much, because it helps you save money on pretty much every aspect of life. Whether it's getting a loan at the bank for yourself, trying to start a business and establishing business credit. While your business credit is being established, they look at your personal credit. And if you have terrible personal credit, they're not going to help you build your business credit. And on top of that, things like insurance premiums, as well as getting certain jobs like law enforcement, all these things take account your personal credit. Now, in closing, guys, I also want to say that your personal credit only matters up to a certain point. Once you're established and once you're in the big leagues investing a lot more money, and maybe you're even trying to become a professional investor where you're using other people's time and money. Once you get to this level, your personal credit doesn't really matter. But that's a topic for a different video. Hey guys, thanks for making it to the end of this video. If you got value from something I talked about today, please remember to like, subscribe, and maybe share it with a friend so that they can get the same value I just gave you. But until our next video, guys, have a good one.